American flag, and the American flag was transformed into a $100 bill. And the $100 bill was waving in the wind, and all of a sudden it started to transform into some kind of digital code, like almost like crypto code. And the crypto, it was moving and it was alive, and it was all kind of like an internet math code, and it was moving and moving and moving. And I said, Lord, what is this? And the Lord said, the dollar's about to turn into a digital dollar. And he said, it will be worth half than what it's worth right now. So a $100 bill would be worth $50. And so he showed me the banks all went bankrupt. All the money that was in the banks, every person that had money in there, no matter if you were really rich or if you were poor, whatever was in the banks, they seized it all. The money was now property of the bank somehow. I don't know how they did it, but all the loans that you have on your house.
It's called a billing. When I did the bill out with the bank, they reverse it. It's called a billing. That's when they take your money and say everybody owes.
And all on your cars and
for a debt they made.
I saw that all of it, they would call it a debt jubilee. And because they couldn't foreclose and take everybody's houses and everybody's cars because of the dollar crashing, they just wiped it out, and they created a new platform. They created a new digital dollar with this.
The mark of the beast currency. Now, listen, let me explain the billing and bailout, because some of y'all probably understand what I was talking about as soon as I said that. A bailout is when you shove money out to bail somebody out. A bail-in is when you take from within to build yourself out.
And then the Lord showed me lines for people standing at Target stores for trying to get food. But they weren't dressed like in poverty-looking clothes. They still had nice clothes on. It's like it happened so suddenly. It was like an overnight deal. And people were in lines at the Target, at Walmart, for like a mile long because there was no products and there was no food. There was hardly anything in these stores. And people were waiting just to get whatever they could get. And so I could see them all in a single file line, and it stretched for forever. And he showed me certain cryptocurrencies that would go up in value. He showed me certain things that would happen with gold and with silver. And he showed me that for this year, he talked to me about the euro. And he told me the euro would be in trouble because of what was going on with Europe and this war. And so that was one of the words that he gave me when I was praying about 2023. That was one of the first signs that this was all going to happen like dominoes. And so I just wanted to come on and tell everybody the things that are fixing to start to happen are very serious. Okay, I want to say this too. I miss timing sometimes. Whenever I'm seeing and I'm praying and the Lord's showing me things that's coming, there's like a depth perception. And
will close 25 branches early next year. Welcome back. New this morning, Pittsburgh's biggest bank will close 25 branches early next year. Back new this morning, Pittsburgh's biggest bank will close 25 branches early next year.
According to the Pittsburgh Business Times, PNC announced the closures in 7 states. Now, none of those cuts are in the Pittsburgh metro area. Back in October, the bank announced 20 branch consolidations. 3 of those consolidations are in the Pittsburgh area, 45 during the first 6 weeks of the new year.
A banking crisis in America might have just started. Because according to Axios, Silicon Valley Bank, the 16th largest bank in America, has now failed. And depositors are panicked, pulling money from the bank, causing a bank run. And the reason that this is happening is because the Federal Reserve is sucking money out of the system. The money supply is actually contracting right now. It's down 2% year over year, which is actually the first time in nearly 100 years that we've seen a money supply contraction. And actually, the only other 4 times this has happened in U.S. history where the money supply has contracted, we have had a depression. And before getting further into this video, everyone, where I'm going to kind of tell you guys how to prepare for a deflationary depression if it happens, I just want to say I understand that saying words like depression and banking crisis can sound alarmist. And I'm not trying to be alarmist here. I'm merely connecting the...
It's going to happen. If the pay increase for minimum wage, but maybe they're not getting the hours because more companies who have done the increase have cut employee hours, some down to 2 days a week. So with that, we need to be figuring out what it is we can do right now before the economy truly collapses. And it is collapsing. Stores are closing. Pharmacies are closing. Look at Walgreens, CVS, closing hundreds of stores by the end of the year. Banks are closing also. They're taking away ATM machines because the push is for online digital banking, the convenience that people are looking for. Is it really a convenience when that system goes down? Having money set aside for things is so important. This is like an ongoing thing with me and my husband and with many other families out here in this country. How do we get money set aside in case the system crashes? I know this is not easy to do because we struggle with this as well. It's always an emergency that comes up when you start saving money, whether it's my husband's big rig truck breaking down or my son going back to school in the fall, knowing that we need to have finances available and ready for him. Things are going to happen. It could be illness. It could be anything, job loss. But what do you do? How do you save that money and set that money aside? I can't give you the answers to everything.
For those on Medicaid and Medicare. Depending on
In the US, where some of the world's leading money managers are warning the collapse of another American bank could lead to a credit crunch and an economic slowdown. Constrained lending as a result of stricter banking regulation could stifle credit to the US economy at a critical time. We'll be getting an expert view on this in just a moment, but first, here's my colleague Samira Hussein on the collapse of First Republic.
As of Monday, First Republic customers turning up at their bank are in fact customers of JP Morgan Chase. The signs above will soon change. First Republic had been under pressure since the collapse of Silicon Valley Bank and Signature Bank 2 months earlier. Last week, First Republic revealed depositors had withdrawn $100 billion in the space of a few months. Customers feared their money was not safe. Investors became convinced it was about to fail. Riding to the rescue of America's distressed financial system, the boss of America's biggest bank, Jamie Dimon. He says the turbulence in the banks is nearly over.
And so this is getting near the end of it, and hopefully this helps stabilize everything. I think you've seen all the regional banks report. They actually had some pretty good results. The American banking system is extraordinarily sound.
First Republic is the biggest U.S. bank failure since 2008. It invariably brings back memories of the collapse of Lehman Brothers and Bear Stearns and the global financial crisis that followed. Industry experts say the causes this time are very different.
Growing development. This is happening in surprising numbers. We all sort of take our local bank for granted until it's gone.
Yeah, I've got to tell you, you look at all the ones that have closed, maybe temporarily during this pandemic, but the bottom line is it may be closing for good. So here's a question. How long will your neighborhood bank branch be there? We're using them less often, so now banks are beginning to rethink the whole idea of branches. The temporary closure of this Wells Fargo bank in Oakland caught customers by surprise.
I'm super annoyed and super irritated. This is a huge inconvenience, and I wish something could be done about it.
Our advisors. Steph, what's your take on what's happening in the market today? You know, we haven't talked about small caps, nearly enough, probably relative to other areas of the market.
Around 9.
But that seems to be the most acute point of pain, certainly over the last couple of days.
Well, it's also been an outperformer up until the last couple of days, right? And it trades along with value, it trades along with cyclicals, and those sectors have actually done pretty well this year, and actually all of last year, right? So this is a give-back stock because there's a lot of nervousness for sure, right? Powell, comments this week, very hawkish, data-dependent, but maybe less willing to wait and see, right? In terms of we're going to go and we got to go more. And I don't know if it's 50 next time or 25, but it probably is 75 more basis points of tightening. And the market's nervous about that because we don't know what the outcome is going to be. And they're focused on, as Richard Fisher just said, they're focused on inflation. And inflation is still stubbornly high, but it is coming down from the peak. So we have to watch that. But the Fed can go this aggressively because the job market is so healthy. Now, I will say tomorrow, yes, is important, but it's one number, Scott. I'm keeping an eye on initial claims, which are starting to inch higher. I did not like that Challenger Gray number, which if you add off the layoffs from January and February, it's the worst number since 2009. So, you're starting to see a little bit of cracks. And then, of course, the Silicon Valley Bank, this is absolutely a catalyst to have the market sell off. The fact that the company backed half of the U.S. venture capital in technology and life sciences, that is so incredibly speculative. And the fact that the company is just now figuring out higher rates are going to hurt their business, this stock deserves to be down even more, in my opinion, and I do not think the large six banks are in anywhere near this kind of shape. They're very, very much diversified into wealth management, asset management, capital markets, trading. Yes, we know net interest income is a big part of their books. However, numbers are coming down for net II after the last quarter. Everybody lowered their NII numbers for the entire year because we saw what was happening. Deposit betas are going higher, and that's actually a pressure point.
But why are we fixated on the large banks when it's the smaller ones where maybe some of the more important issues lie? You just said, and this goes to the heart of our conversation, the Fed can continue to go because the job market is so strong. Well, as I asked at the outset, maybe we're looking in the wrong place, and that's not the decider of whether the Fed is breaking anything. It's what we're talking about today. It's below the surface where the cracks start.
Right. Okay, well, the cracks can start at some of these speculative banks that are involved in crypto. That should be no surprise. Silicon Valley Bank.
Have you heard of turtle traders?
Of the Federal Reserve's rate hikes, while assuming that the venture capital market would continue to stay strong. That left them in a situation where they locked too much of their money away in one specific asset that yielded too low of a return. And that occurred at the exact same time their customers began withdrawing more money than they anticipated. This, of course, is where the dominoes begin to fall. On Wednesday, March 8th, the company announced that they would be selling off a third of their ownership in an effort to raise $2.25 billion. This was done in response to them being forced to take a $1.5 billion loss on a portion of their bond position, which was done to bring enough money back to the bank to be able to continue processing withdrawals. The problem, however, came on March 9th when word got out that the company could potentially be facing insolvency issues, and as a result, their stock price plummeted more than 60%, making it unlikely that the company would be able to raise additional capital to help plug the losses. At that point, the entire situation devolved into a full-scale panic. It was reported that their CEO had been calling clients to assure them that their money with the bank is safe, while startup founders had been advised to pull their money out as soon as possible, just in case. But overnight, things got even worse. On the morning of March 10th, Silicon Valley Bank announced that they had failed to raise capital and instead were looking for a buyer, meaning they quite literally ran out of money, had more withdrawals than they had cash on hand, and were looking for anyone who could potentially take them over. Unfortunately, though, that seems like too little too late, because just a few hours after that, Silicon Valley Bank was shut down and closed by regulators with the message that all of the bank's deposits have been transferred to the new bank. Of course, you might be thinking to yourself, FDIC insurance exists for a reason, and they should be able to recover up to $250,000 almost immediately. Except, That's another problem. Here's the thing, as most of you know, anytime you make a deposit within a bank, you are protected by what's called FDIC insurance, which protects up to the first $250,000 you have deposited in the event of a bank failure. This was created after the bank runs the 1920s Great Depression as a way to incentivize people to retrust the banking system, and it largely worked. Since then, FDIC insurance has continued to evolve for any bank who wants to legally operate in the United States, and the good news is that it's a fairly efficient system. In fact, their website says that you could get access to your money within a few days after the bank's closing. However, in this case, the bad news is that, as Genevieve from Grit Capital points out, only 2.7% of Silicon Valley's bank deposits are less than $250,000, meaning 97.3% of their money is not FDIC insured, and it's not clear exactly what's going to happen to all of that money. Now, typically in cases where deposits exceed the FDIC limit, losses are recovered in a bankruptcy court when assets are sold off to pay their creditors. But as Bankrate explains, that process could take several years to complete, and more than likely, their customers are not going to receive